Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on the 16th of November 2018. And as usual, we will be starting off with the S&P 500 E-mini futures market. So this market, which the week prior to last one had bounced off of the very important 2800 level, basically was able to sustain that bounce off the important resistance level last week as we saw more bearish action pile up into the market. The last 2 days of the week, of course, were bullish as the market actually rebounded once again off another extremely important horizontal support and resistance level, of course, this time finding support, but more on that later. Of course, the level that we've been talking about here for this market for quite a bit is the 2800 level. Of course, a very, very significant level. As you can see, we had multiple occasions in the more recent past where price found either very solid support or resistance off of the level. More recently, actually, we had the market find a lot of good resistance off of this price level. And once again, as the market accelerated into this level a couple of weeks ago, we once again were not surprised to see the market finding resistance off the 2800 level here yet again. You will notice that the rebound of the 2800 wasn't exactly precise. We actually had a very good looking bullish candlestick here that protruded further away above the 2800 level and was able to close strongly as well. But you should notice that it also wasn't able to make it past the prior swing eye here at all. And so we still had, we always were in for a very good chance that the market will potentially find resistance off of this level, and that it did. And price, of course, was very easily pushed right back down on the 2800 level as the sellers here continued to gather momentum, and that momentum pretty much continued going into last week as well. Importantly, though, the market last week also reacted at a very, very crucial support and resistance level, pretty much around the 2700 level. So if we stretch this area further towards the back here, you can see that this was also a very, very important level for this market and continues to be a very important level. And so no surprises once again why the market actually found support off of this level. So as we see this market right now, we see that it's basically trading between two extremely important levels and is generally high in volatility. As you can see, we're still printing a lot of long-range candlesticks where the distance between the high and the low on the candlestick is decent size, and that tells us that this market is still volatile, and for the most part, we're seeing a very tough battle between the buyers and the sellers as the market basically searches for more directional confidence. As of Friday, actually, the market pretty much closed between this range over here, and we see this range as one that is definitely captivating price right now. And until we see the market actually either break past the 2800 level, or a less likely situation would be that the market might potentially actually break the support level and continue its way down. We're still, for the most part, on the longer time frame, we're still expecting bullish price action for this market, and we do have a long-term upward bias for this market simply because we still don't have any major indications to support a weak U.S. equity sector at all. The fundamentals of the economy continue to remain strong, and so really we do not have a reason to believe that this market could be in a really long-term downtrend starting off of here. It's consolidating and range-bound for the time being, but we see this as consolidation as the market basically awaits the entrance of more buyers into the market, where it can then more confidently start to continue to move higher, more in line with the price action that we've witnessed for this market pretty much for the entire year. Okay, so the next market we're going to be looking at here is the light crude oil futures market, possibly the most interesting market to follow last week among the 5 markets that we analyze on a regular basis. Of course, we had more bearish activity here for this market as the sellers continued to push price further down south. If you recall our analysis for this market from the week prior, we had talked about 2 extremely important levels for this market, which could determine the long-term direction for this market. One was, of course, the swing low over here, and the other one, of course, was this more longer-term support and resistance level surrounding the $55 round number. Of course, we've had tons and tons of resistance in the more recent past at this level, and so a rapidly dropping price down into this level, we said would not be potentially a very good indication for the continuation of the bearish momentum here. Interestingly, last week we noticed that as the market was dropping and getting closer and closer towards this longer term support and resistance level at the $1.55 mark, we noticed that the momentum towards the downside actually started increasing. This very last candlestick that pretty much touched the $55 round number here was an extremely long range candlestick that closed very, very strongly as well. We've indicated about this multiple times in the past, but the market or price itself accelerating into a level, into a key level, we should say, is usually not a very good sign of the continuation of that momentum. And so just going by that and how we're seeing the market here accelerate into the $1.55 level, actually a rebound off of the $1.55 here would not be a total surprise for us, even though we believe that a bounce off of this level could potentially actually find resistance off of this former support level over here created by the swing low. So if the market did bounce, which kind of did actually in the last couple of days, we had a little bit of a pullback back above the $55 level, and we almost saw price pull back towards this former support level. That did sort of show us evidence that it's flipping into resistance. But we're still going to be looking at the first few trading sessions this week very, very closely for any indications of strong buying coming into the market, which, like we said, wouldn't be a surprise for us at all, given the fact that the market has accelerated very sharply into the $1.55 key horizontal support and resistance level. Okay, so the next market we're going to be looking at here is the Euro currency futures market, which surprisingly was very cautious last week in terms of the fact that we really didn't see any major activity towards the downside as we had been expecting, if you recall our analysis for this market from the prior week. And the reason for us to be surprised really was because we had seen the market actually take further or move further towards the downside underneath the 1.16 level, which had previously been acting as a pivot for a very notoriously long period of consolidation. As you can see, the market was actually coming back again and again to the 1.16 level, regardless of whether it was above the level or below it. But in the more recent past, or more precisely the last few weeks actually, we had noticed that the market had significantly moved underneath the 1.16 level. It actually pulled back to it and found some good resistance off of it, and then we had seen more bearish activity here, so much so that the market was able to create a new low that was lower than the more recent swing low, as well as the more important critical swing low, pretty much at the same price level that was posted a while ago. And that made us believe that the market here, if this level actually continued to act as resistance, that we could have seen a more formidable or more confident push towards the downside from the sellers, which would have been an indication that the market was trying to resume the more longer term trend over here, and that it was basically past this entire period of consolidation. Well, that really didn't pan out the way that we had expected. As you can see, last week we saw that the market actually did not find any resistance at all at this former support level, and it basically was a week that belonged to the buyers here for the most part. So much so that we also had a very strong close, a strong bullish close, we should say, for Friday, bringing the market all that much closer towards that same notorious 1.16 pivot point over here, marked by the horizontal support and resistance level. And so we believe that even though we're looking at lower lows here, if the market is actually able to continue with this bullish momentum and breaks this former high, we wouldn't really be in a downtrend technically, because we would then have a higher high instead of a lower high that you would typically expect of a confident downtrend. And so we believe that if that happens, that the market is not able to find the needed resistance off the 1.16 level this week, if the market decides to retest the level, we could actually have the market going back into that consolidation phase, and it would really be a scenario that would be reminiscent or similar to the one that we had seen not too long ago, where the market did look like it was confident about trying to break underneath the 1.16 level, but then the buyers just retook control and the market was once again back to the 1.16 level. But all of that remains to be seen. Of course, a lot will depend on whether the buyers will be able to find any kind of resistance at the 1.16 level here at all. And really that will be the more decisive factor in determining whether the market is going to continue with the downtrend over here and we'll see a new lower low, or whether the market will just go back into the sideways consolidation phase that this market has seen for the past several months now. Okay, so the next market we're going to be looking at here is the gold futures market, which over the last week was mostly bullish, and the reason for that was the market bounced off the 1200 round number, and also an area of support and resistance, and the mid-level of a very tight phase of consolidation that the market was in not too long ago. Interestingly, the market was not able to find any kind of major resistance coming in at the very critical 1210-ish area of support and resistance. This is a price level that for some reason the market's been responding to very well in the more recent past. You can see multiple occasions where price found resistance or support at this level. In fact, if you recall our analysis for this market from the prior few weeks, that is the time when the market was trading above this level and then below this other area of former support turned into resistance here. And we were talking about how the market was caught up in a very tight zone here between the 1240 and the 1210 levels. And then when the market was actually able to break the 1210-ish area over here towards the downside, that we had mentioned that it sparked our interest, because that meant that the market may potentially have cleared this tight zone consolidation and may show us more signs of possibly trending towards the downside and possibly resuming the more longer-term downtrend that we saw for this market earlier in the year. Well, not to be really, because the market, as you can see, bounced really hard off the 1200 level, which was actually also in confluence with a rising support trend line. So if you take this to be the first touch of the trend line, this to be roughly the second or the third, or rather just the second touch, we had a third touch of a trend line over here in confluence with the 1200 level. And so buying coming in at this level was not really too much of a surprise, but what was a surprise for us was that the market wasn't really able to hold at all as resistance at this level, and we actually saw the market close above the 1210-ish area on Friday, which is a very, very interesting development, because going into this week, if the 1210 level here continues to act as support and allows for more buying to come in the market, we could actually see a retest of the 1240 level over here. And who knows, a break above the level either later this week or maybe next week could actually be an indication that the market, this entire consolidation phase over here, was actually a development towards a massive turnaround for this market. All of that, of course, remains to be seen and will depend almost entirely on the capability here of the buyers to be able to push prices all the way up to the 1240 level for the retest that we're talking about here. On the other hand, if this market is to continue to be weak as it is right now, we'll actually just see the market maybe retest the 1240 level, rebound again, and basically just continue to consolidate at and around all of these important levels marked by the 1240 price level, the 1210 price level, and the 1200 round number. Okay, so finally we look at the 10-year Treasury Note futures market, which is also which is another market that's stuck up in a very tight period of consolidation and has been stuck for the past several months. Last week, however, we had a couple of really interesting developments. For one, we had a week where pretty much every day the market was able to close at a price level above the level where it had opened for the day. So pretty much we had a bullish day every single day of the week. And we also had a very strong Friday close above the all-important 119 round number, an area of support and resistance. As you can see, we had multiple occasions where the market was able to find decent support or resistance off of the 119 level. And so a very strong close above the level over here, which is not only above the 119 level, but also above the former high over here, could be a possible indication that there's more bullish activity to come into this market going into this week, especially if the 119 level here holds a support. So if that does happen, we could see action where the market may actually potentially pull back quickly to the 119 level, find the needed support off of this level where more buying could come into the market, and we could actually see a continuation of all this bullish momentum where the market eventually tries to make it all the way to the 120 area of support and resistance in round number, and possibly even levels higher up, further away from the 120 level. All that, of course, remains to be seen and will almost entirely depend on the market's ability to hold itself above the 119 level. But just looking at this entire period of consolidation over here, the market just remains weak for the most part, and we're not seeing either the buyers or the sellers basically take control of the market for a decent amount of time. And so just the fact that the market was bullish the entire last week may not be entirely very telling about whether this momentum is going to continue or not going into this week, especially when the market's actually pretty close to the 119 level over here. But like I said, the fact that the market was able to close strongly above the 119 level could be a possible indication of more buying to come into this market, which we would be looking forward to in a very exciting fashion, given that the market was actually very bullish over the prior week.